change, and you're inside the Asian range, and your L50 is falling into reset. Yeah. James, I sent some messages in the chat here on NZD USD. I'm glad you're trading. I'm glad you're doing well, bro. But as like your mentor, your coach, whatever the fuck you want to call me, I would just tell you, in my opinion, I talked to some of the guys, like I talked to Felipe in your group chat. He says you're trading more than him, but he's making more money than you this week. He's only taken one trade. I think you might just be trying to trade too much, bro. Like this L50 is clearly in the sell zone more than it's in the buy zone today. And this is clearly a pair that you and I have talked about as not trading super well in our back testing. So to come in here and try to force a big move on this, I think it's just a little aggressive from you. And I know you managed it well. That's fine. I don't care about that right now. What I'm saying is the setup itself, if you took 10 of these, I don't know if you'd follow those management rules 100% of the time, and you could actually end up losing money out of those 10 trades. So that's why it's important to say, should I be avoiding this completely? In my opinion, yes. With NZD USD, I would avoid it. It's not a pair that tested well. And again, the L50 is in the sell zone more than the buy zone. On Euro NZD, this is also one that, in my opinion, Jerome didn't really need to be involved in. It should be a day where everyone is flat. Nobody wants to hear that, but there isn't anything high probability. How could you call this a high probability setup when there's two sets of bullish divergence telling you that this is a very sensitive price level? It's just a risky trade. That's all it is. It's just a riskier trade versus you being able to say, look, neither of these are super high probability. So why take a trade? Why potentially take a loss? Jerome lost 0.1%. People would say, oh, 0.1%, that ain't nothing. I can take 0.1% losses. You can for a short period of time until you take 5 of them, and then you have to lower your position size, or 4 of them, and then you got to lower your position size. Small losses are still losses. They're still paper cuts. I got to drive this point home to you guys. It's so important to be able to have the system like we have. Jerome knows it. James knows it. You guys know it. Dennis, Felipe, like the guys I'm talking about, you know it so well. Yet you're ignoring some of the fundamental rules that the whole system is based off of. Where is perfect trend? That's all you have to ask yourself. Neither of these had perfect trend screaming at us because, again, Euro NZD with the bullish divergence, 2 sets, and NZD USD being a pair that's not back tested well, and a pair with a swapping liquid 50. That's not a perfect trend. It's that simple. So I hate to see people taking small losses on things that just are avoidable. They're just avoidable. Can you preliminary USD? Is divergence in? Yeah, so divergence isn't an indicator. Divergence has to be drawn on an indicator. So like you draw the divergence using the RSI. We've got 7 minutes until the news. Let's see what Euro USD wants to do. GBP CHF way through ADR. Wow. I hope that everybody in the group chat doesn't take me for being an asshole. I'm just hoping that it helps. So if you want to get in this group chat, I'm going to put a link in the chat right now. A lot of you guys haven't taken the courses yet. I want to make sure you get that information. So you can go to the link I just put in the chat. That'll take you right to my website. It'll give you all the information about the A1, the D1, and the D2, and that'll give you a good understanding of how we trade. And if you take those courses, that's how you get into the group chat. We got news in 5 minutes here on Euro USD. Yeah, see, Dennis made 0.05%, but his risk was 0.1%. What I'm saying to them is, and James and Dennis always listen to me well. That's why they're really good traders. But I'm telling them, like, this is a trade over the long term that if you took 10 of these with that risk reward, it's not consistent trading. It's not going to be profitable over the long run because you're not going to manage them properly every time. So what I'm saying to him is, like, if you force these swapping liquid 50s, right? Thank you, Dennis. So, like, what I'm saying is, if you want to trade so much, which I think is where James and Dennis come from, and they do have a good understanding of how to read the market. When you want to trade, which is what we all want to do, it can be very easy to be like, oh, this is a swapping liquid 50 on NZD USD, or excuse me, yeah, on NZD USD. It is swapping, but it's rising, so I want to trade it. All it takes is one simple question. What could be better? Well, the L50 could be in the buy zone more than it's in the sell zone today. That would then make me think quantifiably with math that this is long bias more than short bias. If you just looked at the TDI today, it is in the sell zone more than it's in the buy zone. That number right here on the right side of the screen quantifiably tells you if it's in a buying trend or a selling trend. And when it swaps from buy zone into sell zone or sell zone into buy zone, that swapping action going from a 60 to a 40 value shows indecision. It doesn't tell you where it's going. Compare that to, just for an example, say GBP NZD. If this didn't have the news, where's this L50 today? This L50 clearly is more short bias than long bias. So the shorts here, in my opinion, make more sense. Same thing on Euro NZD. L50 is much more short biased than it is long biased on NZD USD. So I love that L50 because it can keep you out of choppy trades. If Euro NZD did not have bullish divergence, Euro NZD would be falling 100%. I won't say 100%, 90 times out of 100, 90%, that would be falling because the L50 is better. Sometimes you will get swapping liquid 50s like NZD USD where it swaps like this and it'll run and it will happen. But we don't have a system built to trade that. We don't have any consistent back testing to show us how we know which ones are going to run versus how we know which swapping liquid 50s to avoid. So that's why over time, I've just basically cut them out of my trading completely. Go back on my live streams, go back on my trade recaps. Go find me my most recent trade where I traded a swapping liquid 50. It probably hasn't been a month. And even in the last month, you might find one or two at most. And the only reason I'm doing it is because it's not an NZD pair. It's a Euro pair or a GBP pair that I know trades well. And I get higher time frame confluence, which you had here. Look at my notes. 1 hour, 4 hour, and daily are bullish on NZD USD, but it's still NZD USD with a 15-minute swapping liquid 50. So it's like all of these factors have to come in to make your pizza pie, to bake your pie that gives you your trade idea. And I think if they're just not probable, it's better to just stay out than to try to make a small win. Like Dennis, like I said, he made, oh, that's awesome. Let's look at that in a second. Dennis said he made what? 0.05%? Come on. I love you, D, and I love James. I do. I love you guys so much. But come on. We all know that that's not the way you should be trading. You shouldn't be risking 1.2% to make 0.05%. Just stay the fuck out of the market and go relax. Like, go watch, go mark it up, go learn. That isn't worth it. And that's avoidable by just identifying a swapping liquid 50. That's it. Wait till later.